You are welcome back to the channel. As traders, there are certain things that happen to us which, when we don't control, it leads us to taking certain decisions in our trading journey, which usually leads us to incurring so many losses in our trades. In this video, I'm taking us through a subject which, when we are able to master in our trades, we will stay trading long, we will stay profitable, and then we can enjoy our trading journey. Let's dive into it. Now, the topic I want to discuss today is trading psychology. Trading psychology has to do with the mental and emotional aspects of our lives and the way we trade. We sometimes are influenced by certain emotions and certain mental aspects that makes us decide on our trades, which eventually leads us to incurring losses, more than we anticipated. Now, one of the things that we look at when it comes to trading psychology, the common thing is usually referred to as fear and greed. Now, you see, stock markets are moved by, emotional sentiments by the players of the market. And I mean investors and traders. So sometimes by certain, sentiments, a market can move in a certain direction. Fear can drive people to sell stocks, right? Greed can lead people to over trade or over exercise, their capacities in various forms in trading, and then it leads to so many losses. When we look at fear and greed, it can lead us to wrecking our accounts. So on the stock market, what we do is that when you are fearful, you need to be able to control the fear, stay put, and then exercise sound judgment before you take a decision as to whether you are selling or you are buying. Right. Now, one of the aspects also, when we look at psychology, has to do with overconfidence. Okay? People become very confident in their, analysis or, whatever information that they have about a particular stock that can lead them to become overconfident, that can also lead them to take certain decisions that may not result in any profits. The second thing in trading psychology I want us to look at is discipline and patience. I think discipline is a word that is, highly spoken than, we implementing. Discipline in trading stocks and stock options is very, very crucial. I have spoken severally about how we should discipline ourselves on our accounts, how much you want to trade, how the trading plan that you have, that you are supposed to stick to it, then you need to be able to stick to that trading plan. Okay, and that is why we call for discipline, because most of the time we set a plan for ourselves, but we are unable to follow the plan. That is lack of discipline. And the second thing is also patience. Patience will make you win. Sometimes, you see, you are waiting for a particular price, a particular stock price to get to a level, and then you trade. But because that price is not hitting the level at the time you want, you jump in. If you jump in and then the time that you are supposed to take that entry is not up, the price has not gotten to a key level which will help your entry, you will end up in a losing position. Right. And then the third thing I want to talk about also in trading psychology has to do with risk management. Risk management here, I am looking at we not, engaging in impulsive decision making in our trades. You don't just hear something and you jump out. You don't just look at the chart and you jump out. I think I have spoken about how we have to analyze, to be able to come to a confluence. We have certain factors that come together to form a confluence that tell us that this particular confluence speaks to our direction and we can execute our trade. So if you are looking at risk management, don't just jump into making a decision on trade when you have not analyzed all the aspects that relates to that trade. And then over leveraging our accounts. Sometimes we are too confident. We have done our analysis and we are very confident. So because you are confident, you think that this stock is going to move, the price will move this way, you tend to over leverage your accounts. You need to stay put, and then you need to keep, watch over your own trading plan that you have set for yourself. I have mentioned here before that when I started trading, I traded with a percentage. I would never go beyond it, and I will set my stop loss. So these are some of the things when we talk about, risk management and staying away from over leveraging your account. Because you see, there are people who started trading, got so excited, and then before long, they left. And I have heard that most people who succeed in trading on the stock markets would have stayed there over 3 years. It can be very, very disappointing when you have made all your analysis and then you think that a particular stock price will move in a certain direction and eventually it doesn't. You see, so we should stay put according to our trading plan and take risk management very, very seriously. Now, the other aspect also has to do with understanding losses. Trading on the stock market, you will definitely incur a loss. There is no successful trader on the stock market who will ever say that he never or she never incurred any loss. It does not happen. It does not happen. We need to understand that trading and losses are part of trading. And you see, there are people who don't want to see a loss. And when they see a loss, they try to go back to recover the loss. And we call it revenge trading. If you don't master the understanding that losing is part of trading, you will tend to revenge trade. Right? And you revenge trade, you will definitely end up incurring greater losses than you incurred before. So we need to understand, when you lose, you get out. When you lose, it is part of trading. Tomorrow you will win. You get it. And if we look at some of the things that I have taught so far, if you are going to lose, you won't lose to an extent that it will be that painful. But when you have the understanding that losing is part of the journey, when you lose, well, you call it a day. All right? And you move forward. Tomorrow, you will win. And that is how it is in life. Okay? And then number 4, I want us to look at focus and concentration. Right? You see, when you are trading on the stock market, every day you get up. And if you are somebody who is like me, that I will go and listen to, I have people that I listen to, I have my mentors. Right? Apart from these people, even when they say something, I do my own due diligence and my own judgments. I don't just get up and then I'm following, they say this. And like I was saying, if you are somebody who is like me, who you always want to listen to this, listen to that, you can be distracted. You can be distracted by opinions of people who will not make you become biased because you have not applied objectivity to the analysis you are doing to make a sound decision. No, you have to avoid, distractions and focus on your plan, focus on your analysis, stay, disciplined. Right. Now, the other one that I want to talk about is stress management. Somebody will say, what has that got to do with trading on the stock market? It has everything to do with it. Trading on the stock market, like I was saying, you remember I mentioned fear and greed. If you have some stock that you have bought, anticipating a price to go up. Here is the case, unexpectedly, the stock price begins to fall and falls sharply. It causes stress. It makes you hazy. You don't know whether to sell your stock or to stay. That causes stress. Right. That is just one example. There are so many things that happen, or you can be in a position, and then the price is moving the opposite direction. You may be tempted to come out. You may be thinking of staying in. These things alone causes stress. And that's why I have always thought that do your risk management. There are trades that when I place, I don't look there. I only check if I have made some profit. Yesterday, I entered into a trade. And that trade is that stock is a controversial stock. I don't want to mention the sticker. When I entered it, I saw the level and I saw where the stock price was. And I said, no, this thing must go up. No, it must come down. So I went in for a down. And then it was staying there. It was staying there. It was there. It was there. Until later in the afternoon, I realized I had made 34%. It went to 35%. And I said, oh, this thing, let me leave it. 34%, 35%, I could have come out with that profit. You understand? Because that's huge. But I realized, let me just leave it, because the entry that I made, it was about $150. That trade was about $150. So it is not much. I can lose it. I don't mind. Right. But like I said, I always have my stop loss. So I can't even lose the $150 in that one trade. I have my stop loss. So what is there to fear? Already it's at 35%. Right? 35%. I left it. And that one, I bought it for 6th of September. I bought a contract for 6th of September. I just bought it yesterday. So yesterday was what, 3rd of September? So I have a lot of time to wait for it to play, so that at least if I get like 70, 80%, then I get out. But the point I'm making here is that you should, you should be able to avoid things that will make you hazy, things that will make you keep shaking yourself. Hey, where is it going? Where is it going? No, if it goes well, I pick it. If it doesn't go well, I really don't care, because I have my stop loss and the money I have put inside is just very little of my account. Even if I lose that money, it won't do anything to my account. That's why I said when you start trading, I started with 5%. In your case, you may have to start with 2. Or you can start with 10, depending on your capital and your confidence level. Right? But remember, I've spoken about overconfidence. Right? Stock market, anything can happen. Don't lose more than you can control. And because of that, sometimes it brings stress. Right? So you don't need to, once you set up your stop loss, you have, entered the trade with money that even if you lose the money, it doesn't do anything to your account. You're fine. No stress. You put it there, and like I've always mentioned, if you have set your stop loss and you have equally set your take profit, if it goes to your target, it cuts you. Your profit is registered and you are out of the trade. So no stress. Right. Let's implement some of these things into our trading journey, and trading will be fun. Right? Trading will be fun. I'm telling you, it is fun. 6, adaptability. I love the word adaptability. We need to be able to become adaptable trading on the stock market, because you see, like I mentioned earlier, stock markets are influenced by sentiments, by emotions of people. Remember that the stock market is there, and the players are the investors, the traders, and what have you. You understand? So you see, at a point, markets will go in a certain way, and at a point they will go in a particular way. The point here is that when you are trading we have traders who start trading and they have a particular strategy that they trade. I am one. When I started trading, I always wanted to buy calls. I was always looking for price to go up. So if prices at this time, there is a market crash and prices are coming down, then I have no trades. You understand? Fine, there are times that when markets becomes in a certain way where you lack enough information to decide as to what to do. There are periods like that where patience comes in, like I discussed earlier. But here, you must be able to become adaptable on your own plan. And this one speaks, so much to me myself, because like I said, when I started, I always wanted to buy calls. I had nothing to do with puts. Meanwhile, as an options trader, you will make money when the stock price is going up, and equally will make money when the stock price is coming down. So what is your problem? What is the challenge? You need to understand that this strategy that you are trading, you can become adaptable, and then you can equally sell puts when prices are going down. Sometimes we cannot adapt. And I'm saying that this one speaks so much to me when I discovered that, why am I always waiting to buy calls when prices are coming down? One day it just clicked. I said, but you are an options trader. Options, you make money when prices are going up. You make money when prices are coming down. So why are you waiting to always trade calls? My trading changed. I learned to become adaptable. There is no time that you say you can't trade. All right? If you use your analysis, your technical and fundamental analysis well, you are always in trade. Right? Like I said, on the stock market, there can be certain things that happen, and then all you have to do is just to wait. Like this particular September, if you look at Monday was a holiday in the US. So Tuesday, yesterday, it was all the trading gurus, they were like, we need to come, we need to wait, because the way the market is moving, you can't best tell what is next. Such situations, you relax, you cool off, and then you wait. Let the market decide, then you can follow. All right. So I'm talking about adaptability for long, because as a trader, you need to be able to adapt. You need to be able to follow. After all, I always say after all, we need the money. We don't want a strategy. You are looking for a strategy because you want money. So learn, learn the way that will help you make money all the time than a strategy. You become so rigid to your strategy. And so when your strategy is not favorable now, you are stuck. We don't have to do that. Now, let's look at long-term, having a long-term perspective. Sometimes when you are trading and you have a long-term perspective, sometimes people enter into certain trades and they have an objective. Okay, you have your plan, you have your target, and then you are looking at a short-term gains. But there are times that the long-term gain will be, more than if you are taking the short-term gain. So sometimes let's look at short-term as much as well as long-term. All right, because there are people like me who trades, options, or I just trade for short periods of time. I equally have long-term perspective of certain stocks that I have. That one, if you see an opportunity that you know that this stock will do well in the future, don't lose sight of it. Take advantage of that aspect. Don't always focus on just short term, and it is only short term that you are looking for. So if there's no short term opportunity, you're done. You're sitting down. Nothing to do. No money to make. No. The last thing I want to talk about is being consistent over time. And this one, I will use my own example also again to talk about consistency. I think I have mentioned once and again that me, when I started trading, I wanted a percentage. I was not looking at the money that I will make. I was looking at a percentage. I have always till today that I'm making this video stuck to that particular plan. I don't look at the amount I'm making. I am looking at perfecting on a percentage. Being consistent. Okay? So if I started with 10, I wanted to make 10% on my trade. I perfected that. Now making 10% on my trade is not a big deal. Then I went to 20%. Making 20% on my trade is not a big deal. I went to 30%. Right? 40%. These days, I hardly come out of a trade with 40%. No, very soon I'll be showing you live trades. I'm just having issues with it, how to get it done, because of certain, information that I don't want to bring out. And then with my, some of the platforms, they don't have this how do you call it, the paper trading software on a laptop. It is on the phone, but I'm finding a way of bringing it all out so that we can see live trades and the percentages and all that. So you should be thinking of making consistent. If you want to make 10, like me, when I started, you want to make 10%, you can make your 10%. Try to better on making 10%. See, percentages are good. Percentages are good. When you begin to perfect on, like I said, these days I can easily make 50% on my trade. Easily. But I started with 5, 10, 20. When I get 20 on that, my 50, hey, excited. Why? I was excited because I was able to get the percentage, not because of the money. After all, how much is 20% of $50? That's just $10. You understand? But I had today in mind that if I can make 20% on my trade, putting in 50, next time I put in 100, I will make $20. That will be 20%. Next time I put in 200, I'll make $40. Next time I put in 500, what would that be? Is it $60 or whatever? 20%. But as it is right now, I can make, very good percentages because I am perfecting on it all the time. There have been trades that I've taken, I've made more than 100%. More than 100% because I'm perfecting on percentages. So it is better to trade consistently, your small wins, better on your small wins consistently than trying to do a big win, occasional big wins. What about if you lose? If you want to do occasional big wins, you have no strategy. There's nothing that you have mastered. There is just that you are trying to gamble with your account. And that is not advisable. All right? So we have come to the end of trading psychology, which I think that if you stick to this and then you do all your analysis well, and then you do all your charting very well, using your candlesticks, checking the news and everything put together, that will form a confluence that will inform you and almost give you a signal as to whether to buy or sell. You will always win on your trades. Once again, I want to say thank you for clicking on the video. Thank you. For the subscribers, I want to say thank you for always staying here. Thank you for choosing the channel. For those who are new here, I've always said that on this channel, we are going to explore tools. We will look at strategies that will expose us to winning trades like this one I have just brought out, and then we can run home with our profits. Subscribe to the channel and like the videos, and I will see you in the other one. Bye.